Welcome to Hedge Fund Premium's HedgeCast, weekly video overviews of trends, news, and events.
Hello, this is Richard Wilson, and welcome to this week's HedgeCast. We're here in Moscow for a Banking and Wealth Management Conference starting on Tuesday, and we also had a little hedge fund networking event earlier today. So today we're going to go over some of the top 4 or 5 news stories from the last week. First of all, as we mentioned before, the UK is in the process of approving a tax bill which is going to tax anyone who makes over $250,000 in London at a tax rate of 51%. And I've just heard from more and more organizations that this is affecting, how they're going to start their fund in the UK, whether they start it somewhere else, and whether they're actually going to, move away from the area. And you hear those threats a lot, but I think in this case it might actually materialize. Next is Fortitude Capital. Was actually awarded Australian Hedge Fund of the Year. They actually had positive returns for every month in 2008, and so they just recently were given that award. Next is a New York Attorney General, Anthony Kumos, is continuing to undergo investigations into pay-to-play schemes with pension funds. Basically what's going on here is related to third-party marketing, but referred more specifically to as placement agents. There are large groups of institutional pools of money, such as pension funds, and obviously if a hedge fund manager wins a mandate and gets a large $20 million investment from one of these pension funds, it's a great windfall for that manager. They can make a lot of money just off the management fees, not to mention all the performance fees if they do well. So obviously the hedge fund manager wants to do ethically whatever he can to raise assets. What's happened is there's placement agents in between these two groups, and the placement agents' jobs are to pick very strong hedge fund managers and introduce them to pension funds which are looking for those types of managers. What's happened recently, though, is that some of the placement agents were actually had deals with people inside of the pension funds, and either the fund managers, whether it's private equity fund, hedge fund, or other type, and the placement agent had a deal where the person at the pension fund who was in charge of picking these investment managers were actually receiving kickbacks for selecting certain ones. In other words, they were being rewarded for selecting ones which were kind of paying them underneath the table or paying them extra compensation or something of monetary value, instead of choosing the ones that may be in the best interest of either the pension fund or the people who participate within the pension fund. So that's been the big problem. That's what the whole investigation is undergoing. There's actually been several firms, I believe 7 firms, have paid over $4.5 million in damages so far. And it's a bit of a threat to the third-party marketing industry because there's talks about banning the use of placement agents when it comes to pension funds or certain types of institutional money. And a lot of third-party marketers work within that space, so it'd actually be a big hit to the third-party marketing industry, and it's a little bit of a sore point for the industry because of this ongoing investigation. Next in the news is that performance by managers is up in 2009. The result of this is that many of them have more leverage from speaking with investors when it comes to fees. The hedge fund industry did perform relatively well compared to indexes and the broader market during the financial crisis, but many predicted they'd be really squeezed on the fees they could charge their investors. It's looking now, since hedge fund performance is back up and strong, that most hedge funds are going to have a lot more negotiation power than expected this year when it comes to adjusting their management or performance fees, either in new funds or large existing funds. Next in the news is the upcoming networking events that we're holding up in October, November, and December. End of October, on the 29th, we're having an event in Boston. November 4th, we're having an event in New York. And then in early December, we're actually going to have an event in Dallas, Texas. So I hope to see many of you there at those events. And thanks again. This is another HedgeCast by Richard Wilson. Thank you.